Welcome back. Watching the first edition of Business Morning on Channels Television. We're starting off the week on a very negative note, taking a look at those numbers just released by the National Bureau of Statistics with regards to the nation's GDP data for the third quarter of 2016, where we see GDP contracting minus 2.24% from 2.06% in the second quarter, and largely as a result of, it's lower by 5.08 points recorded in the third quarter of 2015. Taking a look at the oil and non-oil sector, the oil sector contributed about 8.19% to total real GDP, but the non-oil sector continued to be the major contributor to the GDP. We had 91.81% contribution, particularly from the agriculture sector, talking about crop production. Now, the agriculture overall contributed about 28.65% in real terms to the GDP, while mining and quarrying contributed about 8.34% to real GDP. Also on track and also on tap for us this week, the Monetary Policy Committee is holding its last rate-setting meeting for this year in the nation's capital, Abuja, and of course the decisions reached at that meeting will be announced on Tuesday after the meeting. But we're asking this week what your outlook is for the final monetary policy rate decisions this year. Is it policy rate tightening, policy rate easing, do nothing, or none of the above? Of course, you know where to find us. We're on Twitter, on social media. We're on Twitter at BizMorning. The poll is already there. You can make your comments and contributions and, of course, vote. And if you want to, you can also send it to us via email to businessmorning@channelstv.com. So in counting down to the final MPC and putting, of course, into perspectives the inflation numbers and, of course, recently just released GDP numbers from the National Bureau of Statistics, I'm being joined on the program by Oji Udemezwe, who is a financial and management consultant. Good morning to you, Oji. Thank you so much for coming on the program.
Good morning, Harriet. It's always my pleasure to...
So we've started this conversation on a high, even though it was on a negative high, and you listened to Ibrahim. I spoke to him earlier on the show, as well as Bosin. What do you make of these numbers that have just been released by the Bureau of Statistics, GDP contracting 2.24%?
It is a trend that had been expected. The economy has been very slow, in the past few months. Activities have been grinding to a halt. Companies have been laying off staff. Manufacturers have been finding it difficult, extremely difficult, to have access to, necessary FX to import, input materials. All right, and then if you have all of this happening, and of course, power supply has been at its abysmal stage. So all the indicators are not working in favor of the economy, and you see a lot of continuous drop in output. So it's not a surprise. What is surprising is that at this point we have not started as a nation to take the aggressive expansionary steps that are required to reflate this economy, to create activities and support the real sector to, towards growth.
But did you expect this much contraction? What we recorded in the second quarter of the year was 2.06,
right?
And now it's at 2.24. Did you expect this much contraction?
Yes, because the actions that we expected to, be taken to, energize the economy have not been taken, both at the fiscal level and monetary policy level. Even structurally, nothing has changed. These two key areas, fiscal policy, monetary policy, and structural issues. We haven't had serious adjustment that shows that we're a nation going down the drain. We haven't seen much action, but we've seen, a lot of blame storming, trading of blames between the fiscal policy authorities, monetary policy authorities, and government, and different parts of government. We now need to see strong synergy, strong, collaboration, and mutual understanding of what the issues are, and see how we can share the responsibilities to get this nation out of this situation. We can't have the Minister of Finance quarreling with the Central Bank. I'm not saying that quarreling, but we can't have them throwing words across the fence for one another. Across the policy, we need to have strong policy coordination at this point. We need to see the Ministry of Finance understanding the language of the central bank and seeing how they can come together. By the way, even though we've had a very strong central bank in this country over the decades, we've forgotten that central bank naturally reports to government. through the office of the Minister of Finance, Minister of Finance. So, of course, you see in the financial market, we basically have two major markets, the money market and the capital market. All right, central bank is the regulator in the money market, the banks and so on. While we also have the SEC. SEC has also remained silent in all these issues because they have almost been, almost irrelevant in policy issues in this country. But SEC and the central bank naturally report to the government through the Minister of Finance. So we need to see SEC, central bank and Minister of Finance working like a team to see how we can get our financial market, support this economy in a way to drive growth, real growth, and close output gaps.
Let me just quickly, for the record, state that I'm not so sure. I'm not holding brief for the Securities and Exchange Commission, but I'm not so sure that they've been irrelevant. They have continued to make policies with regards safeguarding the capital market, and so I'd really like for you to be a little guarded.
No, I'm not putting anybody on the spot here, but I'm saying that in terms of policy announcements, policy discussions, SEC has not been very vocal.
Well, they have been.
SEC has been concerned about just developing the capital market. But now we need to see what plans they have to ensure that companies in Nigeria, for example, I'm just giving one example, can issue long-term bonds, 10-year bond, 50. I haven't seen any corporate bond, any debenture issued in this economy towards, developing, growing the capacity of the local economy to, generate long-term stable funds to finance infrastructure, to finance agricultural development. So that's my point. The point I'm making
here. Exactly. So just so that we have that cleared up, and it doesn't look like we're starting a fire anywhere where there's no. But then you see, in line with what you've said, taking a look at the fiscal and monetary authorities and the positions, and of course policies that also have come out at this time to ensure that this further contraction that we recorded in the third quarter was not as much as this. What do you think, reviewing the actions that the Monetary Policy Committee has taken since the beginning of the year? We saw relatively stable monetary policy rate up until July, when they increased it by 200 basis points to 14%. Just give us your thoughts, and let's do a historical.
Earlier on in the year, when the wind of recession was blowing and the warnings were coming even from the central bank itself, in fact, late in 2015, I remember clearly that the central bank governor had warned, that warning almost took his job, had warned that if we continue the way we're going as a nation, policy inactions and, executive, that this country might go into recession. He gave that warning. So I give it to MFLA. The man has not been sleeping, I can assure you. Or just that, I'm not sure he has got the right executive, how do I put it, understanding that he required to get policies through. He had given this warning late last year. So as we saw the wind of recession blowing, earlier in the year, the MPC had some merciful consideration towards the economy. Their thinking was that let us see how we could support the real sector and keep our eyes away a bit from inflation targeting. So that was when we saw, some monetary easing. We saw CRR adjust a bit downward, even to 20%. And we also saw MPR kept at 12%, where it had been for almost 2 years. So that was the thinking. How could we, release capital and ensure that, funds are available for the real sector to grow? That was their thinking. But you know what? Towards the middle of the year, when the FX policy, the new policy that tried to, bring about liquidity and all of that, transparency, the FMDQ OTC market for FX futures was launched, when we're trying to, float the Naira, even though eventually it's not floating right now. It's still, hugely pegged. When that policy came up, of course, I warned in this studio that it wasn't going to be, El Dorado, initially. That we must have some kind of volatility before it could stabilize. If the process was managed well, that's the condition. It hasn't been managed well so far. CBN, is still not managing that process very well. And I keep saying it, that as long as you have this huge gap, over 100 Naira gap, between the CBN's rate, official rate, and the street market rate, that if you like, put angels on guard. It will be difficult to curtail the kind of bad behaviors that we see today. CBN is carrying cane, pursuing people up and down. That's distraction for them. If you float the Naira reasonably well, not total float, well, all right, but you release your hands and allow the forces to play a bit, even within the interbank market where the commercial banks are involved.
Which is what they try to do now with the encouraging of international money transfer operators.
What we have seen over the years is, over the months, is allocate 60% to manufacturing. Allocate 30% to this. And the ones we delisted, we have still left them delisted. People are still choked up looking for where to access dollars. Once you create that situation, you can never get it right. And that gap remains there. So I've kept saying here, that we must find a way to, broaden the opportunities for those who want to buy this currency.